Welcome to the investment markets overview for the week ending the 31st of December 2021. It's been a great run for U.S. stock market investors since the March 2020 lows that followed the initial COVID shock, with the blue-chip S&P 500 index gaining 70% since. However, investors would have fared even better by investing direct into Pfizer, the go-to pharmaceutical company for vaccines, a company that also is a very generous sponsor of the major media channels. Pfizer stock has returned closer to 100% over the same time frame, with much of that gain transpiring over the past couple of months as policymakers and their enforcement agencies blitzkrieg their populations into more frequent testing and jabs. Any challenge to the consensus is swiftly muted, just as Galileo, the 16th-century astronomer, was effectively shut down and ridiculed when he questioned the science of the day. Subscribers can check out the links on Pfizer's sponsorship and Galileo. The overview includes the performance statistics for the main stock indices, which were higher in the main, as were sovereign bond yields, whilst the cryptocurrencies were mixed, book-ended by Monero's 11.8% rise and Litecoin's 9.4% slide. The commodities covered were higher across the board, including the precious metals. Meanwhile, on the regional front, U.S. house price inflation is rising 3 to 4 times faster than during the last housing bubble, with an interesting similar divergence between price and home sales. UK house prices are seeing an illogical rotation within the regions. Whilst out east we are interested to note the expansion of nuclear power generation as the West, in particular Western Europe, phase it out. As we ring in the new year, it is customary for investment-related content to provide predictions for it. This column prefers to let the charts do the talking, backed up by our proprietary shorter-term traffic light signals of when to buy, sell or just stand aside, whether it relates to stocks, bonds, commodities and/or cryptos. Check out the links to the various timing solutions. However, if there is just one chart that predicts the future, it is shown here. This 100-year-plus composite index, courtesy of Elliott Wave International, combines US GDP, corporate sales, corporate earnings and corporate book values, showing stock market extremes of valuation, all of which were followed by a severe market crash. Note that US stocks are at a peak never seen in history, and the index has been labeled as the everything peak by EWI for good reason. It isn't only stocks that are overvalued, but also real estate and bonds of all stripes. A final performance table for the major stock indices since the year 2000 concludes the investment markets overview. A one-month trial of this 40 times per year publication is available for less than $15, or the price of just one decent cup of coffee per week. It's an ideal opportunity to grab the bargain discount for 4 publications. We strive to turn the technical into plain-speaking observations, backed up by factual charts and context. Join us for a guide through the maze of economic and market data via the weekly 5-page overview, as 2022 looks to be shaping up to be a very interesting year in more ways than one. A very happy and healthy new year to you all.